Mr. Agrawal, of course, Motilal is in such a client-centric retail investor focus in terms of, I mean, you have the pulse of the retail investor. While we consistently recommend, and you do as well, that investors should invest in a staggered manner, STPs is how wealth is created, trading is not how wealth is created. Would you recommend investors to upfront a little bit of those STPs in this current correction?
So one thing is that whosoever is committed to the SIP, that SIP must be honored fully. Whether you should start, if the market corrects a little more, I think this is a great time to start SIP. See, one of the good things about SIP is that you start at any point of time in 5, 6, 7 years. It doesn't matter. You get some share of good time, some share of bad time. So right now you start with the bad time, you are likely to do well as the good time comes. You start with a good time, like say somebody started 2 years back, now they are seeing a little tough time in terms of corrections and all. So it's part of the deal. In a 10, 15 years of SIP, many good times will come, many bad times will come. So it is always a good time to start your SIP.
Mr. Agrawal, one final question from my end at least, and which is would you reckon that I remember 2014 when I was in your dealing room and we were talking about how a new reformist majority government coming to power does for capital markets. Has the Indian market, by virtue of its size, moved beyond that? Would you reckon from here on over the next 5 years, markets, largely everything else staying good, will largely still be creating wealth for investors? And would the nature of components be different in that maybe PSUs did very well in the last 5 years, maybe some of the others like private banks or some others come to the fore?
See, India is a compounded story. You know, in compounding, sometimes it is slow, sometimes it is fast. So we have seen the fast phase, maybe a little slower phase of wealth creation. But this is I have seen 45 years of the market. In that, I have seen almost head-on Cargill, we have seen bankruptcy of 91, 92. So all kinds of things happen. And yet this compounding continues. So as far as the wealth creating capability of this country is concerned, there is not even an iota of doubt about it. Now, actually I would go to the extent of saying that in next 5 years, if the index were to double, at best it might take another 6 months or 1 year. I would say instead of 5 years, I may say in 6 years at least it will double. But the process of wealth creation and the even pace of wealth creation would not be significantly impacted by these judgments, because economics is very different from politics. Right now what you are seeing is a political mandate, and we have seen a lot of actually the biggest bull runs have happened in absolute minority governments. Like whether it is a bull run of 2000, whether it is 2003 or 2007, which ended up in global financial crisis. We had all minority government or very weak government dispensation in Delhi, and yet the economics overtakes politics. Once the country is being given some kind of mandate politically, there is no headache every day. There is some kind of sanity at the top. I think the economics are impacted, not, of course, politics impacts economics, but there are many other factors which also comes into the economics, and countries' economics, countries' earnings, countries' corporate profitability, they all are much bigger thing than just the politics.
You know, I take that point completely, that once there's clarity of what's happening on the top, things will take its own course. I mean, the India story doesn't disappear overnight because of one election result, and absolutely point taken. Now, having said that, Mr. Agrawal, a lot of viewers, investors watching you right now and looking for some direction from you. You're saying take it easy for a couple of days, but then what are the pockets of growth that you're seeing in the markets? Does the story change from what has been doing well the last several months? So your PSU, defense, railways, etc. Do you see new spaces of growth now?
In this kind of mandate right now, for the newer sector of growth, you have to actually wait for some time. Otherwise, what is continuing to grow will continue to grow, and they should be doing well. All the capex companies, all the defense companies, they would keep doing well. I mean, valuation apart, I don't think the business trend changes so much, but let's wait for the first budget. I mean, that will show the whatever shift has happened in politically and whatever policy shifts which are going to happen because of the new arrangement in Delhi. That will all be visible in the when we have the budget after 30-40 days. So I think let's wait for the change of the any kind of a major churn in the portfolio. You should wait for the policy directions.
All right. Thank you so much, Mr. Raamdeo Agrawal, for speaking with us, one of the biggest voices on the markets, talking about taking a breather for the next couple of days, at least to figure out what's happened.